Well, good day, Michael. How are you today?
Great to be here. Thanks for having me.
But we're thrilled to have you and all of our Veridian associates who are watching this. We anticipate that this is going to be the first of many segments that we have an opportunity to glean from you, to learn from you, and really capitalize on your knowledge. It's just a chance for us to hear firsthand from you, the man behind the Veridian vision, because it is really critically important for all of us to get the best information that we can from the source. And you, as our founder and visionary, what better source is there than to come straight to it. So thank you for being with us. Thank you for putting your time aside to spend with us. Before we get started, what I'd really like to do for our viewers is to just find out a little bit about your background as far as where this all started. What was it that really captivated your interest and really ignited your passion about the energy industry in general?
Okay, well, I think deregulated energy, I think is a fantastic opportunity. What attracted me to it is really a couple things. The size of the market, the opportunity, the number of states, the number of people who have switched, but really fundamentally the value you can create for a customer. And I think that's what really makes this industry special, is whether it's the price, whether it's the product structure that's different than the utility, the value-added services, the product innovation. I think this industry has an awful lot for consumers to benefit from.
And so as that plays out, why do you think that that makes energy one of the most viable business opportunities for an entrepreneur in today's economy?
Well, that was something that, for me, was something I learned after I started Veridian and really took a deep dive into network marketing. I think this industry, I believe in this industry with all my heart. I think when you combine it with network marketing, I think it becomes special because those entrepreneurs in the industry of network marketing have a product that's so perfect, right? It's an opportunity unlike any other, I think, in the network marketing industry.
So, Michael, being a third-party energy provider, it's a really complicated venture. There's so many components to it, from pricing and hedging to really setting the rates every month and providing value to the customers. Can you just give us a better understanding of all that goes into it so we have a deeper appreciation of really how important it is to be smart and how those choices get made behind the scenes?
Well, I think what they really need to understand is that it's unlike a lot of products where you have a set cost of goods sold and then you mark that product up and then you sell it to a customer. Our industry has so many complexities that I think it's hard, especially for really a part-time volunteer sales force, to get their head around. Things such as utility prices, which is what we compete against every day, right? Their utility prices aren't reflective of what the actual, or not necessarily reflective of what the actual market conditions are. And then you have a wholesale commodity cost that is reflective of supply and demand, which changes every day. And then you have transmission delivery capacity costs, which are based on long-term auctions. So you have all these different components, which make for really a volatile marketplace for us. And so when we talk about, back to what I talked about a second, when you talk about creating value for that customer, it's a pretty tricky proposition because you have so many moving pieces, some of which you don't control. And so we work every day with our supply desk, everyone in our organization, to make sure we're constantly structuring those products to provide that value to our customer, even considering all those challenges that are out there in our industry.
So each month, we come to about the middle of the month, and the team gets started, and they start working on the rate-setting strategies to launch the upcoming month. And of course, this has a dramatic impact on all of our Veridian associates. And so, how does it all come together so that we know that we're going to market with the best value proposition that we can for our customers?
Well, it really starts with our pricing and our procurement teams. I mean, our pricing team, they help us understand exactly what the competitive landscape looks like that we're competing against. Right? We've said many times, right, that our competitors are the utilities and then the large energy companies. Right? Those are the people who have a long-term vision, and those are the people that serve the vast majority of our customers in the marketplace. So we want to know what they're doing, and then what we need to do is we take the current supply of energy for our variable customers, and we have forward energy curves for our fixed rate customers. And we do our best job with those realities to make sure that we're providing a competitive product for our associates to sell month over month that's competing with the realities of the utility price to compare or those larger industry players.
So having said all of that, How do you think that in the first 3 quarters of 2013, then that actually translated and equated to impacting our customers?
As you always like to say, run through the tape, right? We got to run through the tape and make the fourth quarter the best quarter of the year. I think we've had a great year overall. I think customers have really benefited, especially those customers who have chosen fixed price products in a particularly volatile industry. I think we've delivered a lot of value. I think for those variable customers that have switched to fixed, they've seen that as well. So I think, as I look on this, I think we've created a lot of value for our customers. I think we've really done a great job, but the fourth quarter is critical. And I think we're getting near the end, and man, I want to see our associates run through the tape.
How well do you think that our industry indicators have been performing overall? Because I've seen how consistent and accurate they've been over the long run, but what actually goes into predicting the rise and fall of the various energy providers who we are in direct competition with?
Yeah, so when you think about the different people we compete with, right? We talked about the utility, right? We've recently on our roadshow talked about how we've been predicting the utility rates to rise in some of the longer term procurement markets. And we've really been spot on with that, and that's been driven by, the conditions we face every day, and ultimately the reality that that's going to get priced into the utilities product. So that is one that, we feel great about. When we think about the other industry players, I think that's where you have really a mixed bag. And I think one of the biggest challenges for our associates is when they go out there and they're looking up and trying to get rate comparisons, they don't necessarily look at the utility price. They go out and look at a price to compare website where you have 50 different suppliers of varying sizes, suppliers that started yesterday, suppliers that have been around for 5 years and have a long-term vision in this industry. I think when they think about that, when they think about the prices that are out there, I highly recommend they look at the companies that are the big, large industry players that have significant books, that have a long-term vision, because those are the companies like us. Those are the companies that aren't thinking about, I want to get an extra customer because I'm going to sell my business next week. They're companies that are thinking about being in this industry 3, 5 years, 10 years down the road, and have to price products with that mindset. Now, there are a lot of small companies in this industry. There are companies that come in because what I love about this industry, it's low barriers to entry, but high barriers to succeed. And so all those new companies that come in, they're focused on just building a book and figuring out an exit strategy. And so they're not necessarily focused on margin, they're focused on customer count. So it's hard for us to, I think associates really need to understand that those companies aren't really a benchmark that we want to compete against, because negative margin business isn't good for us and isn't good for them over the long term.
So, Michael, I think what a lot of the associates would really like to know is what are the hottest markets right now and maybe in the short term? And do you see the trends for those markets and then others staying pretty consistent for 2014?
Okay, the hot markets this month?
Yes.
Ameren. I will just repeat this again. December, it's the December sales event in Ameren, because that's a new market we launched. It's a market we're committed to. There's a 299 rate out there that will not last past year end. So I couldn't more strongly recommend to our field, if you know someone in Ameren, make the phone call, because we are a penny to 2 pennies lower than any of our competitors, is because we want you to help you build and get that business started in that market. Other markets I'm pretty excited about, Maryland. I love Maryland because Maryland is a market that was our first market of all of our markets that went through a challenging time. Maryland has gone through sort of a rebirth. Maryland has 6, 12, 24-month products that all have great value to the customers, and I think that's really exciting. Last one, JCP&L this month. I think JCP&L that 12-month, 10.29 cent rate, I think is a phenomenal product, because I believe come June of this year, JCP&L rates are going up. And so it's already a value versus today, but I think those customers are going to get even more value over the term of that product.
So for those that are in markets that are a little bit more challenging at this point, what would be your encouragement to them? What would be your words of wisdom that you would share?
Well, if we could, we would always have an incredible savings value proposition for your customers, market over market, month over month, till the end of time. But unfortunately, we can't. We deal with realities, and we deal with, as I talked about earlier, all the components of our industry that we don't control. And so when you have a situation like Maryland, which in 2010, 2011 was really a tough market, has come and back and been, a market that I think is, has some of the most growth potential over the next 6, 12, 24 months. I mean, that's exciting. It shows the cyclical nature of our business. So I think the first thing I'd say to associates in those markets, don't give up. Because the moment you disconnect because your rates are challenging where you are, you can't ever get back that momentum. Momentum, if you have it in your business, keep it, right? And focus on how can you sort of build a fence around your business to make sure that when you do go through those, because I promise you, every market will go through those. I promise you that. Unfortunately, I have to promise. I don't like promising anything. Guarantees are not my thing. But I will tell you, I guarantee every market will have a bad period of time. And to that, though, I think the way you ring fence your business is a couple ways. I mean, expand in products. Because just because in your market electricity is not good, gas could be good at that time. Because how the utility sets their rates and the fundamentals of that market, they may be different, and we may be able to provide value there. Second, expanded in solar. I mean, solar over the next 36 months, solar this is a gold rush. And solar is independent of all those other factors that impact your electric and gas business. So build a solar business because it has long-term residuals for you. There's such a strong value proposition for those customers. And the last thing I'd say is connect with the Veridian network and everybody in it. Because you have to plug in at events. You have to get with other leaders. You have to work to network outside of your geography. Because the best way you deal with those challenging conditions is have business opportunities in other markets. Because when we talk about challenging conditions in one market, I can also promise you there's going to be equal number of markets that there's a great opportunity for us to market in.
Well, as we know, there's been a lot of industry chatter about the NISO zone change. And, for us, how do we translate that into what does that mean for the Veridian associate? What does that mean for our market? And what is the business impact that we can expect?
That's a great question. I love hearing you talk about NISO zone changes because you're becoming an energy expert.
Go me.
I think the NISO zone change is really interesting because it's created uncertainty in the future. Because they're putting the sort of downstate sort of subregions together into one, and ultimately this is going to drive up capacity costs. And so, the larger players in the marketplace, I go back to, the larger long-term players. Look at how they're pricing their products there. Because just like us, we're pricing in a risk premium because we don't want to get to the time when that change actually is in place and, we're upside down on our product because we didn't price it correctly. I think in that market more than any, because there's uncertainty about that change, you're going to see a huge disparity of product pricing. Because not every retailer, especially the smaller guys, the guys who aren't thinking about tomorrow, they're just thinking about today, they may not have priced it incorrectly. Or they may be willing to take the risk that the ultimate change in capacity costs isn't as great. And so I think that's really what ultimately will lead to. I don't think it hurts the competitive positioning of us long term because the utility has to face that too. But in the short term, I think it's created a little bit of an issue where some players may not be pricing it in, where others like us who are long term, we've got to price it in because we want profitable business.
Long term.
Long term, absolutely.
So are there any other markets that proposed legislation could potentially impact?
So I think one that's I think is exciting is the rulemaking that's coming in Pennsylvania. So a group of suppliers has put together a proposal that I think is being pretty seriously considered to fully deregulate Pennsylvania, where all the suppliers that are still with the all the customers that are still with the utility will effectively be sold to suppliers. And so everybody will be on deregulated supply. I think that is a huge opportunity for Veridian over the long term. Because even if we don't participate as a company in the purchasing of those customers, every one of those customers is deregulated. Every one of those customers is now educated. There's no disconnect between the price to compare that the utilities provide and what customers get. There's no standardized price to compare. So that is going to make Pennsylvania, in my opinion, a great marketplace. Just the same way I think Texas has created a very robust market with that same strategy. I think you're going to see it in PA. I think what that will do is hopefully that same strategy will become, will potentially give rebirth to what was legislation in Connecticut. Because ultimately, you want utilities to exit that function. Because that function isn't where they make money. You want them to focus on transmission, distribution, and you want retailers, you want a freely competitive market. So I think that's exciting. I mean, we don't know if it ultimately will happen, but if it does, I think long term, that just is a great thing for our business.
And Texas is a great test subject for us to look at how they develop that and how that's worked and how that's really played out. 'Cause
Absolutely.
it's a pretty exciting market down there, I know.
It is exciting, and we want to be everywhere, right? We've said that many times, and I think what I love about Texas is, retailers compete on their merits, and there's not a artificial price set by the utility that may be higher or lower that sets a benchmark that is disconnected with reality. Company A's competing with Company B, with Company C on the value proposition, and I think that's what the market ultimately needs.
So, Michael, let's completely shift gears here for a moment, and let's talk about natural gas, because that's probably the least discussed of our commodities. And what do you see in 2014 for that particular product?
Okay, I think natural gas will become a forefront of discussion for people because really for the first time in our associates' businesses, there's a lot of natural gas customers. And those all grew over a period of the summer months from, as we reported in our financials, right? We doubled our book in the first 9 months of the year. So what does that mean is we've massively grown our presence and now we're coming into that peak month. So I think associates will start to notice it because they'll start to get paid on it for the first time as, massive amount of usages over the next 5 months. And I think that'll be exciting for people and they'll start to understand the value of a natural gas customer. I think natural gas has great potential in 2014. I think it's a little less, I think it's more favorable for the company and from a selling perspective because most natural gas utilities are on a shorter procurement cycle. You don't have the long-term 3-year procurement cycle you have in a lot of our electric markets. That creates that disconnect. So I think natural gas has great potential. I think people will start to notice it as they get paid on it. We're excited about it. We said in our public financials, natural gas is a priority for us as a business because natural gas continues to diversify. Again, it's about long term, and growing that business is so important for us.
Michael, we are all extremely excited about the addition to solar to our product offering. We had great growth coming out of the gate. Obviously, you put in a lot of time and thought into adding that to our product offerings. We need to get a little bit more momentum on the actual referrals and see our numbers increase. So just would really like to hear from you about why you selected solar and why you really think that that is probably the most exciting addition that we have seen in some time to the Veridian suite of products.
Yeah, I just singularly, it's about, for me personally, it's core with my belief, but it's core with my belief, and there's so much value for customers. And I just think that it's all about value. I mean, the solar opportunity right now is about a 20-year fixed price product that in all of our states is at a discount to today's utility price. Remember, your utility price is made of two things: the generation portion and transmission and distribution. Right? Leaving aside the energy side, right? I believe the transmission and distribution over the next 20 years is going to increase materially. Right? Think about all the weaknesses in our electric grid. Think of all the system upgrades, the distribution upgrades that are required, the billions of dollars that are going to be invested by the utilities to maintain grid reliability. Make sure your lights go on every day. That's going to get passed through in those costs. So when I think about the solar opportunity, it's not just about the cost of energy going up over time, which it will. It's that extra, the T&D, which you don't pay for when you have solar. So I think the solar value proposition, in my opinion, is understated. I think it's a tremendous opportunity. It's an industry we believe in. It's an industry you will see us growing in. So I would recommend to anybody. I tell all my friends and family about it, and I think it's a really unique opportunity, and I think that opportunity is going to get bigger. If you look at research reports, the states that SolarCity and other players are active in today, that's expected to double over the next 12 to 18 months as prices continue to fall and they reach grid parity. So home run. If you're not telling your customers about it, it's easy, and you can make a lot of money doing it.
Check the box.
Yeah, very simple. 3 words. Check the box.
Check the box.
Simple.
Simple, super simple.
Yeah.
So, Michael, in closing out our time together, we have been spending a lot of time evaluating all of our tools, what we use to empower the sales force, and one of the things that we're spending a lot of time looking at is the rate communication, and really, revamping how it's written, how it can become a more effective tool. But for right now, what we have to work with, what would be your recommendation on using the information each month to really maximize the experience of the associate as they meet with their prospects and their future customers?
I think that what you said at the beginning is really right? We're rethinking it. We want to make it as valuable for associates. We've brought on, a new VP of marketing, a new director of communications. Their task is making that tool be valuable for associates. So, the first answer to that question is, I would ask the associates to provide us feedback to help make that tool what ultimately they need to be successful. I think in terms of what's there today, I think, we need to give people more ammunition and more points for them to talk to their customers about, because, as we talked about, this is a volatile industry. We may not always be lower than the P2C at that moment in time, but, historical rates help, right? Because you start to look at, well, maybe you're not lower than P2C, but maybe you're lower than the last 12 months, or help me understand where forward energy curves are. And if they're going like this, you can begin to articulate to your customer. So we want to put together a package of information that makes you convincing, so you can show that customer the value in switching to our products, because it is all about value. That's why I fell in love with this industry on day one, because I know how much value you can provide to the customers.
So, Michael, just really want to thank you for the time that you spent with us today, and just ask you in closing, is there anything else that you would like to add to the conversation, anything that you think would be a good takeaway for our associates?
I have to say this. 13 was a great year. I think we're going to have a great finish at the end of the year. I think, if you can, come to Leadership Retreat, because I think Leadership Retreat, there's a lot more new and exciting things. I think Veridian is just unlimited potential in 14, and I couldn't be more excited about it. I couldn't be more excited to be back involved with it. Couldn't be more excited to be building it with you.
So, Michael, I really want to thank you again for the time that you spent with us. It was extremely valuable. But what I really, really want to express on behalf of all Veridian associates is our appreciation for you choosing the network marketing model to take your product to market, so that entrepreneurs everywhere would have an opportunity to capitalize on this incredible venture.